Two legendary market experts are stepping forward to warn we're in the earliest stages of what they call the Great Unraveling, a specific event starting to take root in America that's behind the recent crash in stocks and the record inflation you're seeing. But they worry it's about to get even worse. And many of the things you take for granted are due for a big disruption in the months ahead. Your Social Security benefits will likely be slashed. Your taxes are probably going way up. And many of your investments are likely to continue falling. Meanwhile, even if you think you've saved enough money to retire, you're probably going to need way more money than you thought. Your personal success all comes down to how well you understand what's heading your way. This is why I strongly encourage you to read about their warning today, totally free. It's all spelled out in a free report we've put together about the Great Unraveling. Get the facts yourself. Go to unravelingreport.com to get your free copy of this report. You can learn how to get their full playbook to prepare for what's coming. Again, that's unravelingreport.com for a free copy of this new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show. We are talking the damage done to the crypto industry, looking back at 2022 and forward to 2023, because we now have 5 crypto companies that have filed for Chapter 11, obviously also the major fallout from FTX. So how much damage has really been done to the industry? Joining me today, and please welcome back Simon Dixon, founder of Bank to the Future. Simon, always good to be with you. Love the holiday decor you've brought for us. Nice to see you.
Yeah, great to be here. I was looking back on our video this time last year, and the title of the video was "Can Bitcoin Go Down to 20,000?" So it did, and we were forecasting and getting ready for a Bitcoin crash.
So you know what? That means folks have to watch this video to prepare for 2023. Thank you for bringing that up, Simon. Lots of ground to cover with you. But, since it's been a while since we spoke and we didn't speak since the FTX fallout, I'm just curious to get your thoughts on what's gone down here.
Yeah, so 2022 was a rough year. We've gone through the process of companies exposing themselves. They were out in the tide, they were naked, and it was looking pretty ugly. So really, we've been flushing out our crypto villains, and we've had our fair share of drama in crypto villains. And we've now got 5 companies in Chapter 11. The tragedy behind that is that's millions and millions of people that, somewhere between 1 and 5 million people that have all stuck with their funds in one of these companies in general. And some of those were, just good actors that made really bad decisions, and others were really bad actors that have made really bad decisions and are now in prison for those decisions that they've made. It all started off with the first one to go in Chapter 11 was Voyager. And Voyager was, it really exposed to FTX. FTX had about a $400 to $500 million loan, and they immediately, SBF tried to come in and swoop it up and hide its fraud. Then we had Celsius as well. And Celsius was the one where I was one of the 21st largest creditor in that one. So I've been intimately involved with all the different court cases. And 6 months later, the lawyers have spent tens of millions, and we're still really where we started. The impact of that, then that exposed FTX. And now we've had mining companies like Core Scientific, and BlockFi, which was the original one from FTX. The first prisoner with SBF, and then all the contagion has happened since.
So 2 things I'm curious to get your thoughts on, Simon. You mentioned these bad apples. I recently had Kevin O'Leary on, who, as you know, was a $15 million paid spokesperson for FTX. He recently testified in front of Congress. Now, he brought up is blaming Binance for the fall of FTX, saying, it was maybe part of some sort of master plan to become the sole monopoly in the game. What do you think of that theory, firstly? And 2, he, when I was pressing him saying, is this fraud? Should SBF be going to jail? His response was that in America, he's innocent until proven guilty. What are your thoughts on that? Can you go on the record saying that SBF this is clearly fraud and he should be in prison, or do you agree that it's too early to tell?
From my perspective, it's 100% fraud. And it is, I think, the bit that SBF did is he came on a bunch of Twitter spaces. I was on a Twitter space. Elon Musk was on it because SBF was trying to get funding for Twitter with client money. And I was drilling him down on the structure of client money versus amount on loan in margin. And it's clearly commingling of funds. It's clearly the funds were used and collateralized, which was illegal. And that is a crime and is left to the loss of billions of dollars. What we saw this year was really, even today, Alex Mashinsky's wife came out today and blamed Celsius's collapse on both SBF and then said that me as a creditor, I should be paying all of the funds. So this is really the year of blame shifting from narcissistic characters that seem to be protecting their backs. And with SBF, he went on that roadshow really incriminating himself and admitting to all sorts of fraud. And so, Kevin O'Leary, from my perspective, it's a bit shameful. I think it's a bad look. I was one of the investors in Celsius, and when I realized what was happening with people's money and that it didn't have the licenses, it was an illegal hedge fund, an illegal bank, I had to put my hands up and say and try and do what's right, given the current circumstance. I think Kevin is doubling down, and I think in 2017 he was not a big fan of our industry. SBF paid him. He's a paid spokesperson, and I think he's still fulfilling his role. I do, however, believe that there is an element of truth, that there is probably billions of dollars to be clawed back as a result of the fact that client funds were probably used in order to pay off Binance. But that will come out in the Chapter 11 court process. And it does not defer away from the level of illegal activity that were happening by both Alex Mashinsky and SBF.
You mentioned CZ and Mashinsky. They've both put you kind of in their line of fire. I mean, CZ has come out saying and tweeting that you've been spreading a FUD. And Alex Mashinsky recently tweeted saying that not so long ago this year, Simon only had nice things to say about me and Celsius. He spent 6 months doing due diligence before signing a new agreement. Any response to Mashinsky and CZ here?
Yeah, so firstly, Mashinsky and Celsius failed the due diligence process because they wouldn't give us the financial disclosure and the regulatory disclosure that our broker-dealer asked for. In fact, the co-CEO, the co-director of the company asked us to change our broker-dealer because they were annoyed with the number of questions that we were asking before we would put their next funding round on our platform, on Bank to the Future. And what I notice is this blame shifting is causing manipulation from other characters. So the background behind that story is Mashinsky tweeted out that in our crypto drama, Twitter wars. And then CZ actually responded to somebody else on my tweet. And I was talking about how the offer for Voyager that Binance has put through was actually, it's almost like a liquidation. It allows people to get access to their funds. And CZ responded to that and saying that FTX delayed the process by 6 months. And then somebody else asked under my post, can you respond to all the FUD about Binance? And he put FUD. And then one of the Mashinsky followers manipulated the tweet, took a screenshot, took everything out of the middle to try and make it look like CZ was saying FUD on my response. And so this is the typical kind of behaviors that we're seeing around these blame shifters using highly manipulative tactics in order to try and tarnish people's reputation as a result of shifting away from the responsibilities. And fortunately, the examination report comes out in the 17th of January, which will investigate all of the shady $117 million that Mashinsky pulled off the platform over the lifetime, sell token market manipulation, misrepresentations, and tax issues as well. So, we're going through that. But yeah, me and CZ, we've been discussing throughout these processes what support we can give. And then bad actors try and manipulate screenshots to make it look like we're having some drama when we're not.
Okay, so that's interesting. So you're on good terms with CZ.
Yeah, I mean, CZ is, he's been looking at what he can do. He was originally in the Voyager bid, and SBF decided to use his political clout in order to try and make Binance look bad. And that costs creditors about 6 months. Now, the Binance offer is not as good as the FTX offer, but now we know because it's actually with real money that legitimately was acquired as opposed to client money that SBF was stealing in order to hide some of the fraudulent loans that were collateralized on his token.
Just a little bit more on the blame game here, since it's an interesting discussion, Simon. Mashinsky also bringing up a recent article that SBF loaned the CEO of the block, a competitor to CoinDesk, $43 million, and hence that's the reason the block always wrote so favorably in regards to FTX. Thoughts on this news that broke?
Yeah, so I was on a Twitter space with some of the chief editors in Block after the news was announced, and the gentleman there was equally as disappointed that SBF was paying politicians, paying media outlets, and paying just everyone off in order to play the bankers' game. FTX essentially recreated many of the issues that we've experienced with political control in order to manipulate regulations. And I think all of that's going to come out in the examination report. One of the challenges of this is that sometimes you've got two different criminal activities playing with each other, and one saying this one was worse than my one. And so at times, Mashinsky may be saying something that's true. I certainly believe that FTX was up to some shady activities, manipulating some of the tokens based upon, almost naked shorting. There's plenty of research that will come out there in order to, manipulate, and that's true. But it doesn't change the fact that there was a big gaping hole, and this was an illegal security, and it was going to come down anyway because Mashinsky was using our money in order to play hedge fund manager and VC without having any of the licenses to do so, and then persuading people to take all of their retirement funds out of the bank account, saying that it was safer than a bank and everyone should have all their savings with Celsius. So it's one person that may be a bad actor saying something about someone else that may be true, but it doesn't excuse the activity that you did yourself. And they're all just, we've got our Do Kwons, our Suzus, our SBFs, our Alex Mashinskys. And if he doesn't stop doubling down a bit further, Kevin O'Leary might be, one of the lower ones there, depending on what comes next and where he goes when more and more reveals itself.
Okay, really good points there. One thing that O'Leary kept bringing up was that eventually this will all come out because it's all on the blockchain. Is that true? Will it all be revealed on the blockchain? They can't hide if there was corruption at FTX?
Well, blockchain certainly adds a new layer and element to the investigation. So you can see the inflows and outflows if they were done in cryptocurrency. Obviously, you can also see the bank deposits because they can, subpoena the banks that were putting in transactions. And we saw that with, Signature Bank being caught in class action lawsuits because they were serving FTX. And now, this again puts off banks from servicing our sector and industry, which is bad for the industry because it's always been challenging anyway. It is true, it adds another layer, but it also adds another layer of fraud. So one thing we have seen is that you can use the blockchain, for example, to give proof of reserves, but you don't know what legal agreements sit on top of those. And we've seen some really shady stuff between exchanges where like crypto.com was sending client funds to gate.io, and then the auditors decided that they're taking down their audit reports. So there's no substitute for the fact that you may have proof of reserves, but your proof of liabilities and contractual relationships don't sit on a blockchain. And so there's a danger of people thinking that the blockchain can't be manipulated, but there's always humans, greed, fraud, and contracts that can sit on top of the blockchain that requires a good old centralized audit in order to detect some of this embezzlement, crime, and shady activities.
Nothing is foolproof. Nothing is bulletproof.
You need, it's like, I think blockchain gives law enforcement an additional tool, and I think it's a net improvement when you take the company out of the middle, and two people can transact person to person. And then if you commit crime, you create an immutable record of your crime that in the case of things like Bitfinex hack, many years later, Department of Justice can use in order to build it. But at the same time, you still need the trust elements, the legal relationships, the contractual relationships. And you've got to be really careful about slapping on the word decentralization in order to create a false sense of security. Because as we saw with Terra Luna, it was just essentially a central banker that was making decisions. And with all of these companies, people were giving their funds for bad actors to play VC and hedge fund manager with their money without having the correct disclosures, suitability requirements, security law compliance, rehypothecation, or even just good old custody. Don't touch that money. One of the big setbacks I think we will get is that people keep saying it's time to regulate these businesses. Well, they were already regulated. If you're managing people's money and selling them investments, securities laws exist for that, whether you've got crypto or fiat. If you're storing people's money and they maintain the owner, then custody laws exist for that already, whether it's fiat or crypto. And if you're lending people's money, then those lending licenses already exist. And if you're taking people's money, rehypothecating, then you need a banking license in order to do that. So we don't necessarily need new regulations for these centralized companies. We just need the centralized companies to actually adhere with their compliance requirements.
Okay. I want to stop you there. That's a good point. Let's go a little further with that, because I've had experts like Rick Rule coming on. Again, this is to your point about the blame game here. And he says at the end of the day, if you're an investor, you can only really blame yourself if you didn't do the homework, or if you just, entered an investment because a basketball player was the spokesperson. What do you make of that statement? I mean, if someone invested in FTX, had really, done their homework or dug a little deeper, would they have saw the corruption? Was it visible? Was it clear as day?
So I think there's two parts to that question. The first is, how do you recover given that you made a bad investment and now you look back and say that was obvious, I made a mistake there. The reality is that if someone is committing crime, you expect these platforms to be honest, and you expect, if it's regulated, for regulators to have a sufficient level of oversight so things like this don't happen. Now, every now and then we get these black swan events, and you have to rely upon, the regulators to do their job there and the companies to be honest and have a governance structure that would detect any dishonesty from that. Now, but that doesn't mean that you as an individual, how do you recover? Well, one way is just saying, using regulations and saying, well, I should have been protected. And that may be true, especially when there's crime involved or illegal activities. And maybe you just weren't, most people have day jobs as well. Is why most people outsource to wealth managers and fund managers and pension funds to do that work for them, because they're not full-time financial professionals. But if you want to recover, even if it's not your fault, you have to look within yourself, see what you can learn from it. And even if it's not your fault, blame yourself, because then that's the only thing you can control. And when you blame yourself, even though it may not have been necessarily your fault, you can say, well, what were the red flags? What can I learn from next time? Was I diversified? What types of risk management things do I need in my practice do I need to look for self-custody? Do I need to look for a regulated custodian? And were those returns too high and did I get greedy? If you can look within yourself and ask those questions, then you can recover. But at the same time, there is a system that should be protecting you, and sometimes it fails, and sometimes the legal system, should be doing what you don't have the time to do.
Very valid points. In your post-analysis of the FTX collapse, what was the number one red flag as a lesson?
I think the number one red flag was really fast growth. I have a big problem with these companies that grow so fast. At Bank to the Future, we're the longest standing company in Bitcoin. To get our systems where custody is fully segregated, securities are compliant with US laws and non-US laws, to have it where people have full disclosures and we don't allow them to invest more than they can afford to lose based upon full transparency, it's taken us over a decade to build those systems, and we never ever grew as fast as some of these fast growth companies. If someone's hiring 800 to 1,000 people based upon an increase in the price of their token, it's companies that have a token attached to their business model that's being leveraged, that's a red flag. A company that grows too fast, trying to catch up with companies like Coinbase, which have been around since 2011, really those companies that were trying to replicate the Binance story, which is grow a token really fast, become a massively fast growing company, and try and fix the things later. Those are the red flags. I think slow and steady wins the race. The faster they grow, the faster they fall. We also saw lots of shady activities, if you're a bit more sophisticated, with naked shorting, the numbers just not adding up. Celebrity endorsers, TV adverts, and just really, where did SBF come from? I hadn't heard of him. I've been in this industry from the beginning, and suddenly we're told that there's this new expert, but where did he actually come from? We rely upon other people, and it's just that human laziness of, if all of these VCs backed him, then it must be true. The one thing that I've learned from this is, nothing is ever as it seems.
That is a very, very good question. Where the heck did SBF even come from? Anyhow, I want to talk to you about Tether. Earlier this month, the Wall Street Journal called out Tether for its secured loans, whereby Tether lends out its own stablecoin tokens rather than seeing them up front for hard currency. Now, when I asked Max Keiser about the future of Tether, he became rather defensive. Want to get your thoughts now on concerns now surrounding Tether loans. Could the next fiasco be Tether?
No.
No?
No.
That's it.
Well, it's
just no.
It's the first. It's a bit of the stablecoin market is outside really of Bitcoin and the. Can I say shitcoin on the show? I don't want to offend anybody.
Yes, go ahead. No, right, no one's offended.
There's Bitcoin, and then there's Mike Novogratz and a bunch of shitcoins.
What's Simon Dixon's take? Is Tether at risk here?
Tether's connected to Bitfinex. I should say all the disclosures here. So full disclosure, I'm a shareholder in Bitfinex. We did the recovery plan for them in 2016, and we contributed to the Tether recovery plan in 2019. However, I shouldn't let that bias, make me do a Kevin O'Leary. And at the same time, Bitfinex is an investor in Zonte Capital. Zonte Capital is Max Keiser's fund supporting Bitcoin companies in El Salvador. So really, if you want to know the narratives, follow the money. And I think us as an industry, we need to hold ourselves to a higher standard, disclose these interests, and then really commit to the truth. So what are the big systemic risk events in our industry? One of them is Tether. Now, what are the pros and cons? Tether exists outside the US system. There's benefits to being in the US system. There's benefits to being out of the US system. There is also the fact that it has been attacked for a long, long time. And every time it did have its holes, it put its hand up and put together a plan to fill those holes. However, it's been attacked and it publishes lots of information, but it's not audited to the same degree as, say, Coinbase or Circle, which does USDC. Full disclosure, I'm shareholders in both of those as well. So really, it's about understanding the flows. I think Tether is, it's been scrutinized so much, it's had Department of Justice after it for such a long time, that even if there wasn't a thing that they needed to fix, they probably would have fixed it by now. But here's the real point. We don't really know. What's the point with Binance? We don't really know. There's still the whole, you got to look at, well, what's happening with Digital Currency Group and Grayscale and Genesis and Gemini. Well, we have a bit more transparency there, so we can kind of guess, but then you have these contracts that you don't know with private companies. The only company at the end of the day that we can say with a certain degree of accuracy that we understand and know is those that are publicly disclosing. And so Coinbase is a public company. And I think really that is the lesson, that these multi-billion-dollar mega companies that are pretty much too big to fail, or they have catastrophic effects when they do fail, they need to be treated like public companies right now. We need a level of transparency that we haven't seen before. And the one good thing that's come out of 2022 is that I think everybody has sat around in their board meetings say, we're good actors, what can we do to prove and give trust in our products? And if everyone does that, it holds the whole industry to a higher standard, and we get the correct level of disclosures based upon blockchain and just good, traditional, old-fashioned audit.
Where do we go from here, Simon, as we wrap this interview? Or maybe the better question is, where do you want us to go?
Well, I think, if you look at the traditional cycle, I've been through 3 of them now. This will be the 4th one, where you tend to have Bitcoin in 4-year cycles. 2 years prior to halving, leaving to Christmas is where we are right now. That's normally the bottom of the market when you have a regulatory crackdown. We haven't seen a traditional recession in Bitcoin's history. So that's a new set of circumstances that we get to test, whether it can be a long-term inflation hedge based upon the fundamentals of people owning their own money, important in today's environment, being able to spend their own money, important in an environment of central bank digital currencies and censorship, and the fixed supply, which is important in an environment of excessive money printing. I think the fundamentals prevail, and I think we go into the next 2 years into the halving cycle and have a recovery. But this is a real test for Bitcoin, whether it's going to take a bit longer term, depending on what happens in the traditional markets. We need 2 markets side by side. One is the decentralized market. It's vitally important to recognize that although there are problems in many of these DeFi products when they start being built on top of Bitcoin as well, many of those DeFi products worked exactly as the smart contract said throughout this whole crash. And they weren't really, there were ones that were just bad and bad contracts, but the ones that were time tested, I think we get to learn from that. At the same time, the centralized companies just need to perform the regulations that exist. If you're rehypothecating, you're a bank. If you're lending without rehypothecating, then you need lending licenses. If you're holding client funds in custody, you need virtual asset service provider or custody or bank charter licenses. And if you're selling investments with the expectation of return, then you're selling securities, and there's securities laws that exist. All of the exchanges and centralized companies need to upgrade and come in compliance with the regulations that already exist. And we need to ensure that we fight at full force for anything that takes away people's ability to opt out of centralization. Bitcoin is something that we need in the current environment, and DeFi is a way of saying, if the traditional financial system doesn't give us the products we want, then we get to opt out. We get better fiat currencies, better central bank digital currencies, better opt out, and we have Bitcoin, this digital hard sound money, and a decentralized, innovation-based, peer-to-peer financial system that keeps the traditional system to account with competition around the world when you get too aggressive with those regulations or too lax.
So that said, given the disastrous year that Bitcoin has had in terms of price performance, what thesis can you come to? I mean, a lot of folks were hoping it would be the ultimate fight against inflation. I mean, did it fail as an inflation hedge? And does it matter to you? Does it even matter to you?
To me, I judge Bitcoin as an inflation hedge on the 4-year cycle. So if we get a 4-year cycle that doesn't beat inflation, then I know that Bitcoin's failed as an inflation hedge. We haven't had one of those yet. And so as a short-term inflation hedge, it's completely failed. If you're going month to month and you're thinking you're beating inflation by speculating on Bitcoin, you're just a trader. If you're going through a 4-year cycle, every 4-year cycle that I've been through in Bitcoin, I've been through 3 of them now, has significantly outperformed inflation. I expect to see the same again. But this is our first real test of that hypothesis. Throughout this whole process, I continue to buy Bitcoin every month, and I'll continue to do that, whatever the price is. I think we've got 3 systemic black swan events to get through. The first one is, what happens with Tether? Personally, I believe it gets through it. I think it's been attacked enough that it's pretty resilient now, but it is an enemy to the US dollar. So the US will try and attack with all its full force. We also have the Binance situation, again, an enemy of the US because they have their US and non-US, and the US will want to bring everything within their data flow. And so we need to understand we're stress testing Binance. If they pass the test, so far they've become significantly bigger, and they passed the test so far, but we need that auditability and a higher standard to put it in line with some of the standards of Coinbase. And we also need to see what happens with Digital Currency Group and all its subsidiaries, because that is one of the main, onboarding to institutional investors, and then the regulators are going to decide that they have failed as well because they didn't allow the inferior product to be converted into an ETF, which is a much superior product. We've got those 3 systemic risk events to get through. Hopefully they all fix themselves. And if they fix themselves, I'd expect a building year throughout 2023, leading into the 2024 halving cycle, depending on what happens in the traditional macro economy.
Just one last question, Simon. Bitcoin maxis will point to the all-time high of hash rate for Bitcoin. When does that get reflected in the price?
Again, I don't like to put specifics there. I just look at the 4-year cycle. But if you're asking me to pin me down, I think we hit all new time highs in 2024, leading into, the halving event is normally a non-event. You normally to get a bull market leading to the halving, a correction, and then normally all-time highs. So I'll be looking to accumulate Bitcoin each and every month throughout 2023. And if any of those black swan events happened, expecting to pick up more cheaper Bitcoin, let the mining industry adjust. It's got this beautiful adjustment mechanism. And we go on. And the thing that's worked throughout this whole process is good old-fashioned Bitcoin, owning it, owning your own key, diversifying, making additional investments if you choose. But most of your digital hard sound money, Bitcoin worked, Bitcoin did not fail. And those that held Bitcoin in their own self-custody just sat back and watched the spectacle eating popcorn.
I appreciate the clear and concise answers, Simon. Thank you for that. And if I may add, I know the last time you were on, things got a bit emotional, but it is the holidays. So let's end on a merrier note. And you have beautiful decor, so I'm going to just join you and put on my Santa hat.
Fantastic.
And wish you, my producer asked me to do this, and wish you and all our wonderful, beautiful viewers very Merry Christmas, Happy Holidays. Thank you, Simon.
Yeah, thank you. Absolutely. It's been, as I said, a rough year. So this Christmas, remember what's important. I lost my father this year. It was a bit emotional last time we were on the show, but I'll be spending some time with my father's spirit that got me where I am at this moment. And just remember that we were never talking about money or any of the things. So no matter how much you're lost, just don't lose sight about what's important, who loves you, and spend your time with those people. And we'll come back fighting in 2023.
I could not end it on a more beautiful note. Simon Dixon, thank you so much. And thank you all for watching. I wish you a wonderful Christmas, holiday, whatever you're celebrating. All the best. And we'll see you soon.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.